Looks like hedge funds are moving back into gold, and that's to be expected. I mean, gold actually dipped a hair below 1,200 for a while there, and then some people are forecasting it's going to go below 1,000. And usually when the mood is that freaking crazy, you want all lopsided, it could change. It could change, and it's not going to change right away though, because there's a couple other factors out there. Like there's always there's an outlook for a strong dollar. That's one thing. But hedge funds are jumping back into gold, and they'll wait it out. That's basically what it is. You wait it out, and you get a good profit, and you're gone again. But Jim Rogers, I know he's stating about, it's possibly going to go below 1,000, but, they actually kind of cherry-picked his words, the way he was talking. He says right now it's about a 35 to 40% correction. It could be a 50% correction, which would make it slightly below 1,000. But, it's also the 35 to 40% correction also. So, I think a lot of people have gotten shaken out, because there's never really been that many people into gold and silver in the first place. That's one thing. Now, one thing is China has made a direct trade agreement with France. In other words, they're negotiating for it right now, where they're not going to be using the dollar as the world reserve currency. They're going to do direct trade with France. So I think that's a pretty big deal. And, I guess the next step might be Germany, And, the deal is, like, when they're making this overly dramatic prediction about the dollar's going to lose its world reserve currency, I don't think it's going to completely lose its world reserve currency. The euro is a world reserve currency. It's just that it's going to be one of several. It's going to get diminished a little bit at a time. It's not going to go away completely. That's the deal. They get over dramatic and they say it's going to lose its world currency reserve status, but it's not going to do that to that extent. I doubt that very much. And considering all the other nations are in debt up to their eyeballs, it's probably a good bet that the United States might be one of the last ones to fall, even though it's got a very high debt, because there's much greater debt going on in Japan. I think Japan's going to be the first of the first world industrial nations to really see the biggest problems because of their super QE and their stagnation of 10 years or so. It's terrible. They're getting mismanaged by old Abe up there on the top. So, but that's all bullish for gold and silver. Even though silver's erratic as all hell, if gold goes way up, silver's going to go way up. Now, I was talking about the Middle East as a wild card. Here's another event, because it looks like Russia's mobilized 160,000 troops after U.S. officials confirmed Israel took out Russian missiles at Latakia arsenal in Syria. So that's their most ambitious exercise since 1991 in over 20 years in the Far East. So you could see where things could possibly head for major, more heated confrontation, right? And that's always bullish for gold and oil, and also silver, ultimately. Because there's one thing I'm always looking at with silver. And actually this is going to be, and I said this a while ago, but my real strategy on selling silver is not going to be based so much on the price, but as in a ratio of silver to gold. If it's up like 55, 60 to 1, it's not time to sell. If it gets, before it got down at about 31 to 1, when it got up to about 47, 48, it got down to 30, 31. I think the next time it goes up, the ratio is going to get even lower than that. It's going to get down in the 20s. Now, I know people like Mike Maloney and, other people out there, David Morgan, and of course there's Bix Weir, who's really out there in outer space land. They predict, 10 to 1, 1 to 1. Bix Weir, he's nuts. I just can't believe how people would follow that stuff. But that's really, really, really outrageous. Before, when we're getting into 31 to 1 at the top for silver, and people are predicting 1 to 1. 1-to-1, and more people were believing it because it was going up. Well, that's exactly kind of what's going to happen when it gets back in the bubble, because everybody's going to, the only reason it's going to go that high is because people are going to think it's going to go higher. And you're going to be afraid to sell. But that ratio is probably something to really look at, because I think the next time it goes up, the ratio is going to have to be at least 20-something to 1 before it peaks out. It's going to break through the 30 to 1. Now, I'm going to cautiously sell when it gets down in the low 30s in small increments. That's what I will do. But I think the Middle East is actually the key to actually where silver's going to go up. It's not going to be so much. Yeah, the QE has an influence and stuff, but a lot of times other things come about. When there's conflict, there could be fast change. There could be a much faster change going on. So that's why I think this outside event, I don't know when it's going to occur. And in reality, I thought they were going to attack Iran back in late spring of 2012. They did not. But that was really based upon reality. It wasn't based upon like total guesswork or anything like that. Netanyahu was hell-bent on doing it then. And he did not. He was being held back by the Mossad. So things could have changed. Now, it looks like what's really holding it back is the Obama administration, along with, what's-her-face, Valerie Jarrett, who was actually raised in Iran. So there's like a lot of people in the administration, the president and its top security advisor, or whatever, top advisor, not security advisor, top advisor, are both very friendly with Iran. So that's one of the reasons the policy hasn't been that way. But that would be a major, major impetus why gold and oil would go up, and also silver. Now, there's another outside event. I just want to throw it out here, but we talk about collapse. Actually the only way, and it wouldn't be a permanent collapse, but the only way you can really have a serious upset in the market would be a catastrophic terrorist attack. But just to throw it out there as something. Say there was a nuclear weapon detonated in the financial sector of New York City. I'll guarantee you every freaking market in the United States would crash like crazy. In that case, you probably want physical assets in your hand. You don't want anything electronic. It's like that would be a major problem. And, a lot of people just don't want to believe this, but when Iran is pursuing nuclear power, they're not pursuing nuclear power. I think I flat out, hands down, proved that they're not pursuing nuclear power. They got so much natural gas and oil to last them 100 years. And their electrical infrastructure is so inefficient that they can get more gains by just upgrading the infrastructure than by pursuing nuclear electricity. But, some people will say, well, they want to get a nuclear bomb to defend themselves. But, I don't buy that, because I think that regime, and I'm not talking about the Iranian people, they would use a nuclear weapon somewhere in the West. I know there's false flags by the U.S. and all that, but I think they would if they got a hold of them. I think they would for real. So, the policy of the United States to take out the Iranian regime, which, a lot of people in the West seem to be against, is actually a smart policy. It's not that our Western elite are so perfect. They sure aren't. But, I don't think anybody in the West has lived in Iran under that regime, because they really couldn't complain about it. You know what I mean? So that's one thing I want to put to light. But, just this happening recently with Russia mobilizing 160,000 troops, which is their biggest exercise in the Far East in over 20 years, over the confirmation that Israel actually knocked out the missiles in Syria. That's telling you something's going to heat up there. I don't know when. It's been drama for years and years and years. But these little things, and one of the biggest things is that hedge funds are actually jumping back into gold. They're not doing it to lose money. They expect it's going to be turning around here pretty soon. That's what they expect. So, You know, I think when the sentiment gets so ridiculously lopsided one way, it's going to change the other way. I know people talking about, $10 silver. Well, I think that would be a piss poor bet to take, but who knows? And I know like you can calculate the actual cost of silver, but it's very difficult to do so because there's so many ways you can calculate the cost of something. The fact is, the mines are getting clobbered because they are losing money. The bigger mines aren't well, they're starting to lose money now. The smaller mines were losing money for quite some time. So that's going to affect supply. And, if people wake up and think that silver and gold is a safety, it's like there just isn't enough of the stuff to go around. So, when people panic the other way, well, I guess you're going to be very afraid to sell. So, but right now is not the time to sell. Not at all. So just hang in there. Some events are coming up. Basically, I guess 3 of them. Russia's mobilizing 160,000 troops over in the Far East. Hedge funds are buying gold. And also China's trying to make a direct trade agreement with France. And I figured if they do that, they're going to do Germany too, right? Why not? Then the dollar, it doesn't go away. It's still going to be a world reserve currency. But then it's going to be less of a world reserve currency. And that's the game that's going on.